Have you ever considered farmland as an alternative investment? It's a question not commonly pondered in the realm of finance. Farmland, after all, doesn't have the glamour of tech stocks or the thrill of cryptocurrencies. But what if I told you that this humble asset class holds the potential for significant growth and profitability? Farmland, you see, is not just about picturesque pastures and grazing cattle. It's a vital economic sector that fuels our daily lives. Everything from the food we eat to the clothes we wear. And yet it's often overlooked by investors, perhaps due to its perceived complexity or unfamiliarity. But here's the thing. While other assets may be susceptible to market volatility, farmland stays relatively steady, its value rooted quite literally in the solid ground. And with a growing global population and increasing demand for food, the potential for cash flow in this sector is substantial. With the right knowledge and strategy, farmland could become your next big investment success. When we talk about investments, stocks, bonds, and real estate probably come to mind. But how does farmland compare? Let's start with the potential cash flow. Stocks and bonds often promise attractive returns, but they can be volatile and unpredictable. Real estate, on the other hand, can offer steady income from rental properties, but it also comes with hefty maintenance costs and the potential for vacancy. Farmland, however, presents a different story. It can offer a steady stream of income from crop sales or land leasing, and unlike a rental property, your farmland won't call you at 2 a.m. with a plumbing emergency. Next, let's consider stability. The stock market can fluctuate wildly based on a variety of factors, from global politics to the latest tech innovation. Bonds, while generally more stable, are subject to interest rate risks, and real estate markets can be heavily influenced by local economic conditions. Farmland, in contrast, is grounded in something everyone needs: food. No matter what's happening in the world, people still need to eat, creating a steady demand for crops. This stability can lead to more predictable returns and less stress for investors. Now let's talk about potential for higher returns. Stocks can certainly skyrocket, but they can also plummet. Bonds typically offer lower returns, while real estate can provide decent profits, depending on the market. Farmland, however, has the potential to yield high returns, especially with the rising demand for organic and locally sourced foods. Finally, there's diversification. Stocks, bonds, and real estate all have their place in a balanced portfolio, but adding farmland can bring a new level of diversity. It's a tangible asset that's less correlated with traditional markets, helping to spread risk and potentially boost overall returns. As you can see, farmland holds its own against other more common investment options. It offers potential for steady cash flow, stability, higher returns, and diversification. So next time you're considering where to put your money, don't forget about the humble farmland. One of the main attractions of farmland investment is its stability. This stability arises from the constant and universal demand for what farmland produces: food. Regardless of economic trends, technological advancements, or political climates, people need to eat. This simple fact ensures a consistent demand for crops, which in turn provides steady profits for those who invest in the land that produces them. The stability of farmland investments is further enhanced by the diverse range of crops that can be grown. From grains such as wheat, corn, and rice, to fruits, vegetables, and even biofuel crops, the options are plentiful. This variety allows for flexibility in response to market demands, adding another layer of security to your investment. If the demand for one crop falls, another can take its place, ensuring that the land continues to yield returns. Now let's compare this to other forms of investments. The stock market, for example, is notorious for its volatility. Prices of stocks can skyrocket or plummet based on a multitude of factors, many of which are unpredictable. This unpredictability can lead to high returns, but it can also result in significant losses. Real estate, another common form of investment, is also not immune to market fluctuations. Property values can rise and fall based on economic conditions, changes in the area, or even natural disasters. And while real estate can provide a steady income through rent, it also comes with costs such as maintenance, repairs, and property taxes. Compared to these, the stability of farmland investments is remarkably refreshing. Yes, there are still risks involved, as with any investment. Weather conditions, pests, and diseases can affect crop yields. However, with good management practices and crop insurance, these risks can be mitigated. In the end, the stability of farmland investments is not about guaranteeing a profit, but about providing a solid and reliable base for your investment portfolio. It's about knowing that no matter what happens in the world, there will always be a demand for what your investment produces. In a world of volatile markets, the stability of farmland investments is a breath of fresh air. Diversification is a key strategy for any successful investor. But have you considered diversifying with farmland? In the world of investments, diversification means spreading your investments across various asset classes to reduce risk. Farmland, with its unique characteristics, can be a great addition to your portfolio, offering a different kind of stability and potential for growth. You see, farmland is a real asset. It's tangible, it's finite, and it's essential. We're not making any more land, but the world's population is increasing, and with it, the demand for food and resources. This fundamental truth gives farmland a certain resilience that can help weather economic downturns. Moreover, farmland can offer steady cash flow. Rent from farmers, profits from crop sales or timber harvesting, and even potential income from renewable energy sources like wind farms or solar panels can all contribute to a continuous stream of income. This can provide a buffer against the volatility of other markets, protecting your portfolio from drastic fluctuations. And let's not forget about the inflation hedge. With rising global food prices, the value of farmland and the commodities it produces tend to rise alongside inflation. This can protect your purchasing power, especially in times of economic uncertainty. But perhaps one of the most compelling aspects of investing in farmland is its low correlation with traditional asset classes like stocks and bonds. This means that farmland often moves independently of these markets, providing a real diversification benefit. When stocks are down, your farmland investment might just be your saving grace, keeping your portfolio balanced and your spirits high. Investing in farmland can also be a way to contribute positively to the world. By supporting sustainable farming practices, you can play a role in promoting food security and environmental stewardliness, while also making a profit. So why not take a closer look at this often underappreciated asset class? With its potential for steady returns, resilience against economic downturns, and real impact, farmland can make a valuable addition to a well-diversified portfolio. Farmland is an often overlooked piece of the diversification puzzle. So what are the key benefits of investing in farmland? Let's delve into the heart of the matter. Firstly, farmland investments have the potential for significant returns. In a world where traditional investment avenues are increasingly volatile, farmland stands as a beacon of high potential. The ever-growing global population and the constant demand for food translate into a steady, reliable income stream for farmland investors. As the saying goes, people always need to eat. And as an investor in farmland, you're directly tapping into this fundamental human need. Secondly, the stability of farmland investments is another major draw. Unlike the roller coaster ride of the stock market, the value of farmland doesn't fluctuate wildly. It's not subject to the whims of international trade wars or the latest tech startup's IPO. Instead, farmland value is tied to something much more predictable and tangible: the land itself and its capacity to produce. This stability can provide a comforting buffer in times of economic uncertainty. Thirdly, investing in farmland provides a unique opportunity for portfolio diversification. Adding farmland to your investment mix can help spread risk and potentially improve the overall performance of your portfolio. It's a different asset class that doesn't move in tandem with stocks or bonds, providing a level of protection against market volatility. Moreover, farmland can act as a hedge against inflation, making it an attractive proposition for long-term investors. Lastly, farmland investments can also contribute towards environmental sustainability. By investing in sustainable farming practices, you're not only securing your financial future, but also playing a part in preserving the planet for future generations. In essence, investing in farmland offers a rare combination of high-potential returns, stability, portfolio diversification, and an opportunity to contribute positively to the environment. With these benefits, it's clear to see why farmland could be a great alternative investment. Investing in farmland presents a unique and potentially lucrative opportunity. As we've explored in this video, the appeal of farmland as an investment lies in its potential for cash flow. The continuous demand for various crops, driven by a growing global population, offers a consistent source of income. The stability of farmland investments is another compelling factor. Unlike many other investments, farmland is not subject to the whims of volatile markets. It is a tangible asset that will always hold value, regardless of economic conditions. The addition of farmland to your investment portfolio also offers the benefit of diversification. It is a different asset class that can balance your portfolio by reducing risk and increasing potential returns. We encourage you to consider the potential benefits of investing in farmland. It could be a strategic move that pays off in the long run. Remember, the best investment strategy is a diverse one, and farmland could be just the diversification your portfolio needs.